What if I told you that the greatest money laundering scheme in history is not happening in dark alleys, offshore accounts, or shadowy crime syndicates, but inside the very financial systems we trust every single day? Governments, banks, and institutions have perfected a trick so vast, so invisible, that it launders trillions without anyone calling it by its true name. It's not hidden in suitcases of cash, it's buried in debt. And the deeper you look, the more you realize debt itself has become the perfect laundering machine. To understand this mystery, we need to rewind. Forget the mafia, forget drug cartels. This story begins with kings, empires, and the birth of central banking. In the 17th century, the Bank of England pioneered the idea of lending money to governments in exchange for bonds. This wasn't just financing, it was a way to transform risky promises into safe instruments. Debt became a product, tradable and respectable, even though it was often covering wars, corruption, or collapsing economies. Once debt was dressed up as a financial instrument, it could hide its origins. Dirty money, whether from conquest, exploitation, or manipulation, was suddenly clean. The earliest laundering through debt wasn't about criminals, it was about rulers. Monarchs borrowed heavily to fund wars. Instead of admitting bankruptcy, they issued bonds. Investors bought those bonds, not realizing they were essentially laundering the costs of destruction into legitimate financial products. By the 1800s, European empires were financing colonial expansion through debt. The profits from exploitation were funneled back into respectable markets. War created debt, debt created bonds, bonds created legitimacy. The cycle turned blood money into respectable wealth. Fast forward to the 20th century. After World War II, the Bretton Woods system established the US dollar as the global reserve currency. Institutions like the IMF and World Bank began lending to developing nations. On paper, this was aid. In reality, it was a laundering mechanism. Debts disguised as development loans often funded corrupt regimes, siphoned into private accounts, then recycled back into Western banks. Debt became the perfect cover story. Nations could borrow endlessly, and the money trail was obscured by layers of legitimacy. Fractional reserve banking amplified the trick. Banks could lend far more than they held, creating money from nothing. Every loan was a new opportunity to disguise flows of capital. But laundering through debt has limits. In the 1980s, Latin America faced a debt crisis. Loans meant for infrastructure were siphoned off by elites, leaving nations bankrupt. In 1997, the Asian financial crisis revealed how speculative debt could destabilize entire regions. In 2008, the global financial crisis showed the ultimate laundering trick: mortgage-backed securities. Toxic loans were bundled, repackaged, and sold as safe investments. Dirty debt became clean until the illusion collapsed. Laundering through debt creates bubbles. Bubbles burst. Ordinary people pay the price. When debt laundering collapses, the fallout is always the same. Governments bail out banks. Citizens face austerity, inflation, or unemployment. The original beneficiaries, the elites who siphoned money, rarely face consequences. Debt laundering doesn't just hide money, it transfers risk. The losses are socialized, while the gains remain privatized. Over time, Regulators tried to fix the system. Transparency laws were introduced. Anti-money laundering frameworks targeted criminal organizations. International agreements sought to limit tax havens. But none of these fixes addressed the core issue. Debt itself remained the laundering machine. As long as governments and banks could issue package and resell debt, the system continued. Look around today. The same tricks are alive and well. Global debt has surpassed $300 trillion. That's more than 3 times the world's GDP. Nations borrow endlessly, rolling over debt instead of repaying it. Corporations issue bonds to buy back their own stock, disguising financial engineering as growth. Central banks print money through quantitative easing, inflating asset prices while hiding the true cost. Over $2 trillion is laundered globally every year. Much of it doesn't happen in criminal networks. It happens through debt instruments, offshore bonds, and sovereign lending. Debt laundering isn't a bug in the system, it's the system. Debt is the ultimate laundering tool. It transforms questionable money flows into legitimate financial products, hiding corruption behind respectability. The system thrives on opacity. Complex instruments, offshore accounts, and central bank policies make it nearly impossible to trace the true origins of capital. Ordinary people bear the cost. Every crisis caused by debt laundering ends with bailouts, inflation, or austerity that punishes citizens, while elites escape. The secret history of money laundering through global debt systems, ISNT, just history at S, happening right now. Every time a government issues bonds, every time a bank repackages loans, every time central banks inflate markets, the laundering continues. As long as debt remains the foundation of global finance, the system will keep laundering money in plain sight. The next crisis isn't a question of IFF, it's a question of when. If this opened your eyes, don't let the story end here. Share it, discuss it, and question the narratives you hear about debt, aid, and financial stability. Subscribe for more deep dives into the hidden mechanics of money. Because the more we understand, the harder it becomes for the system to keep its secrets. The greatest laundering scheme in history isn't hidden, it's right in front of us. And only knowledge can expose it.